everyone. Welcome to the Stock Market Morning Prep video for Monday, May 11th. Well, we had an explosive move on the non-farm payroll numbers. They were just perfect. Not too hot, not too cold, right in line where market participants liked the number. And we had a big gap up into the opening, and pretty much that was it. We really didn't move at all after when we had that big gap up. We just we grinded a little sideways. We drifted just a little bit lower, then grinded higher again. But absolutely no volume. Volume is dismal, has been for quite some time. So we just got to make sure we are on high alert here. The markets are right into this sweet spot, if you will, and meaning that we could either break to the upside or break to the downside. We are in a corrective phase right now. You might not see it. It's ever so slightly. We had some weakness the previous week, and actually for the last couple of weeks we've just been kind of drifting down, and then we pop back up again. Really bad price action actually in the marketplace. So I'd like to see the markets really start to gain momentum in one direction or another. I mean, it's just been like a wait and see type mode, and it's actually been quite boring. Now, what I'm going to show you is that we could get a really big move to the upside before we move lower. And I've been talking about bonds and the banks and financials along with equities. And, bonds have been correcting for the last couple of weeks. Is this a top in bonds? We've been in a bull market since 1981. We all know that. We had a nice call in bonds about 2 weeks ago about saying, look, I like to sell bonds. That was 2 Fridays ago. And then last week we just had this big move lower. And where does that money flow into? Now, if markets are rotating, bonds that are being sold, money that's being raised should go into equities, and that's going to push equity markets higher yet again. And what does that do to banks and financials? Well, obviously, since the Dodd-Frank Act, they have to do what they really didn't want to do is now they have to go back into traditional lending, and they would be lending aggressively. And I mentioned that last year, late December of 2013, actually. I believe that was, and you could all see that on the YouTube videos that I put out. But it's happening now. So if that's the case, who's going to benefit? Obviously, equities, banks, and financials are going to move higher if yields start to rise as well. And then, of course, bonds will go lower. And what else is going to rise? Home builders. So this is something that we're going to be keeping an eye on closely, these key sectors of what I'm going to be looking for if the markets do start to rise. Okay. Now, I'm still looking for some sort of a correction. We're in the corrective phase, but I like to see us break some key levels before I really start calling a local top, at least. Right now, markets are moving higher, and we're going to continue to do so. We need to see follow-through from Friday's numbers. Now, we really don't have any economic data coming out, so that's going to it's going to be all technicals here, unless obviously something surprises us. We'll just have to do a wait-and-see mode. But I'm going to show you some charts. Let's get right into it. XLF weekly chart. I've showed this to you many times already. 25 is the key number. We need to break 25 and hold and consolidate up above 25. Then we'll have a full-fledged breakout of the banks and financials, and that's going to put a bid into U.S. equities. Here's the daily chart. As you can see, this is Friday's jump up right above the resistance area. That is a bullish sign, guys, okay? That is definitely a bullish sign. When you jump back up above and break higher above any key resistance level, that's a big sign. So keep an eye on the banks and financials for some sort of a long play here. All right, now let's go into the TBT. This is the short bonds. So as you can see here, we had a really big explosive move for the last 5, 6, 7 trading days, and now we're starting to flag into the 20. I like to buy bonds right into the 44.5, 45, anywhere in this area here from 43 to 45. I think would be a safe bet, and then obviously down below here would be a stop. So let's keep an eye on what bonds are doing. They're soft again in the pre-market, and we'll just wait and see, because if bonds continue to sell off, guys, and this is a big number here, this 49.21 in the TBT, this is the short ETF to short bonds. You'd buy this, okay? Remember that. And then the TLT is meaning getting long bonds, okay? Being long the bonds itself. So this here I'd like to see is come in nice, a little bit lower volume, and then break back higher. Once we break back above the 200-day moving average, you could see we have plenty of room to run to the upside. I mean, plenty of room to run. But of course, that's not going to come with certain pullbacks as well. Okay. Spiders. Again, gap up here. We do have this ascending triangle. Really nice formation. Again, you could see what kind of a chop we've been in since the beginning of the year. And obviously since the first quarter had ended. This is pretty nasty stuff here. So we need to either break back above it or break back below in order for us to really, really start defining a good trend. Right now, there is no trend. We've been sideways. We've been sideways for months, and that's continuing here, okay? So let's take out this high, 212.48, and we can start moving higher on higher volume. Then that would excite me a little bit to the upside. Below this, on higher volume, would really get me going to the downside, okay? But until then, we just have to sit and wait and be very selective in our trading. IWM, big bounce back up. But remember, IWM was really a leader for several months now, since February. We broke down. Once we broke down, it really never recovered. This is our secondary leader, and this is what scares me here. And again, the transports, which I'll show you next, this is not a good sign. Okay, I want the IWM, the Russell, small caps, get back above the 20 and start to really make higher highs and higher lows. Okay, this is not a good sign that we're below the 50 and below the 20. Yes, we are above the 200, but if we start to break down again, I think you'll take the 200 real quickly. All right, but again, this is all going to be predicated on what's happening with the bank's financials and, of course, bonds. Okay, let's take a look at the transports. Again, very, very bad looking chart here. As you can see, we have gone nowhere since December, actually late November. And you can see we've just been chopping around here. We sold off. And now we're, again, hanging below the low end of this range, which is not a good sign. Again, I keep mentioning the canary in the coal mine. This is definitely it here. If we start to lose that 200 again, I think you're going to see money managers start lighting up their long position, and then that's going to put pressure on equities, okay? So transports, Russell, not looking so great. The other indices, okay. But again, the banks and financials are going to have to really pick up steam here. Technology is doing okay as well, but nothing that great. As you can see, the diamonds, we gap back above the symmetrical triangle, which is a good sign. We just need some follow-through today. And, you know, getting a big move like that, you might even have a pause day today, and that usually does happen. And lastly is the Qs, as you can see here. Now the technology sector has held up rather well. Pretty much most of the year. So I like to see the transport, I keep saying transport, sorry about that, the technology sector start moving a little bit higher here. And again, if the technology sector moves higher along with the banks and financials, bonds selling off, you're going to have definitely a bid into equities. And that's what we're going to be looking for in the coming days and weeks. But again, we are still range bound. To me, I'm just looking to try to scalp some good trades until we get a definitive trend. Okay? Hope that helps. Have a great day, everybody. We'll speak to you tomorrow. Take care.